So in this presentation, I'm going to look at sample assignment 2, question 1 for cost and management accounting of the ICB courses. And this question is all about the manufacturing general ledger accounts. And this is the information that you get. They tell you that this information relates to a year that has ended. And so we expect a lot of transactions that we are going to record in the general ledger to be recorded at this date, the last day of the year. And in this case, it's 31 January 2020. So what do they give you? They give you the balances of your raw materials, your work in process inventory, your finished good inventory, and your indirect material inventory. Then they tell you about the transactions, the consolidated transactions or the summarized transactions for the year. And then they give you certain balances for the end of the year. And then they say to you, what is required is you must prepare the following general ledger accounts. And then they give you 1, 2, 3, 4, 5, 6, 7, 8, 9 general ledger accounts to complete. First thing you have to notice is that these general ledger accounts has to be completed in a certain order. And if you complete them in the order that I'm going to show you, it's easy. If not, this could become very difficult. Okay, so the order in which you do it is you start with the 3 accounts for which you already have all the information. That is the direct material, the direct labor, and the factory overhead cost. I'm going to show you that now. So that is how you start: direct material, direct labor, factory overhead cost. What the examiner is doing here, they're trying to see if you understand that you must do it in a specific order. Okay, so let's have a look at it. I always say to you, arm yourself with a couple of highlighters when you go into a test or an exam. So now we are going to look at direct material. So the first one is direct material. I've used a green highlight color for that. And now I go and look for everything that talks about direct material. Now, raw material and direct material is exactly the same thing. So I mark that when I highlight that. Balance, our opening balance, I highlight that. Okay. Other thing that I will highlight, I will go and see, do we have a closing balance? Yes, we have, and I highlight that. And then I see, are there transactions here that relates directly to our raw material? And I say, yes, there's the credit purchase of raw material, and then there's the freight on the raw material purchases. That's also on credit. So I choose to pay for both of these on credit. So it creates a liability. In each case, I might pay for it during the year. That is not the issue here. Okay, so both the material itself and the cost of getting it to me, I need to calculate here. So you will now see that what I've done is I went and I created for us an Excel spreadsheet. And on the Excel spreadsheet, I created 9 tabs for each of the ledger accounts in the order that we are going to do it. Okay, so let's have a look at direct material. So we know that on the first year of our financial year, on the first day of our financial year rather, there was a balance that was brought down, and that balance is given as 125,687.45 cents. And if you don't believe me, that's where it was. That information was given. So we simply record that information. Okay. Now, during the year we had the transactions was consolidated. And what we know is we are now going to record that transactions for the last day of our financial year, being 31st January 2020. And it's creditors control because we bought that direct material on credit. It will be recorded in a creditor's journal with some number, and the amount was given as just over 624,000. Let me show you. 624,000. Next one, don't have to write the date again, is also creditors control. Same folio reference, and this is now to get it to us, the freight cost, also given. I'm not going to go back to the Word document now. It is given as 100,910. Okay. Now, what we want to do is we need to say, okay, there was also a closing balance. But before we do this, let us add all of this up. So when I add this up, that is the amount I get, 850,905. And I know that my debit side and my credit side must balance. So I just copy that same amount to my credit side. Now I know, because it was given, that at the end of the, oh, where is it? Was it here? Sorry, I don't know where I've written. At the end of my financial year, there was a balance that was given for me. Okay, that balance is the one that is carried down, and it was given, I'm going to show you here at the bottom, as just over 91,575. So I go there and I record that amount. And then I say, okay, in order to balance this transaction, I already have the balancing amount. So the thing that I'm going to balance it with is the work in process account, because this is the next one that I must do. And my work in process account is going to be somewhere in the general journal. It's not one of our 8 normal journals that we use. And it will simply be the 850 minus the 91. And that gives us the 759. So now I know that when I go to my work in progress ledger account, and I have an entry here under direct material that says work in process for that amount on the credit side, in my work in process general ledger, I'm going to have a corresponding entry on the debit side that will say direct material. Okay. Now we not just leave it there, as was the case in the previous financial year. We now have to bring it down. And if I had a balance of 91,575.61 at 1 minute to midnight, I will still have the same balance at 1 hour, 1 minute past midnight. So I can simply put in the same amount. Okay, and now I have completed my direct material general ledger. Okay, and so I move on. Now I need to do the direct labor. Let's go to our Word document again. Now, direct labor, what did I choose here? Okay, I said direct labor was a pink color like this. And I go and I look and I say, here we have it. Direct labor is given for us. It was the company wage, factory wages. It was the pension fund contributions, the medical aid contributions, and the UIF contributions that's paid for by the employer. So our entire salary expense for our direct labor is lying here. Okay, so simply go here and we say, okay, in terms of direct labor, there's no opening balance. Okay, it's a normal expense account. So I'm not going to have an opening balance just on the 31st of January. In other words, the last day of my financial year. I have certain entries here, creditors for wages. If you just said wages, it would not be the end of the world. My pension fund contributions, my medical aid contributions, and my UIF contributions. All of these I would have recorded in some general journal, and the amounts are given. And so I simply record the amounts as it was given, and I add them up. Okay, I know that it must balance, so I take that same amount and I put it on this side. And guess what happens? The account that I balance it with, once again, is my work in process account. And it is that exact same amount. And I am done with my direct labor GL account. Okay, move on to my factory overhead cost. Let's go to the Word document again. See it here. Okay, factory overhead is in the light yellow, and there's quite a couple of things that come here. Okay, so first thing that will that is included here is my indirect labor. Okay, so you're going to look for indirect labor. Then everything, all these additional admin type expenses, but only as they apply to the factory, because we have proportioned this, and we say some of this money is actually paid by the factory and some of the costs are carried by the admin officer. So only if it is carried by the factory do we include it here in our factory overhead. So we already had indirect labor, electricity for the factory, telephone for the factory, insurance for the factory, and the rent paid for the factory. Then there was also the consumables or the indirect materials that was issued to the factory, as well as the depreciation on the factory machine. So all of these things, 1, 2, 3, 4, 5, 6, 7 transactions, we are going to put under factory overhead cost in our GL. So let's do that. Go to the GL. Once again, we start with the last day of our financial year because there's no balance in a expense account. Details there: indirect labor, indirect material, electricity, telephone, insurance, rent expense, and depreciation. All these cases we are going to record, well, these transactions would have been recorded in a general journal, and all the amounts is given. So we simply copy these amounts as they are given. Good. Once again, did I miss one? Looks like it. No, I didn't. Okay, so what I then do is I simply total this amount, take that same amount over to our credit side, and once again, the balancing entry is work in progress. Now see what has happened now. I have balanced direct material, direct labor, and my factory overheads with work in progress. Now that I do my work in progress GL account, I'm already expecting at the very least those 3 transactions on my debit side, because the balancing was done on the credit side. Now let's have a look at our Word document once again. And it says the following. Okay, when I work with work in process, I'm going to use my blue. Okay, I'll have a balance for the beginning of the year. My work in process inventory was 29,866. And at the end of the year, I've got the unfinished goods on hand. Okay, when we do it, go to work in progress. On the first day of the year, there was a balance that was brought down, and it is given as 29,000 something. Then on the last day of the financial year, I have those 3 balancing entries for work in process. So what am I expecting? I'm expecting entry for direct material, direct labor, and direct overhead cost. There they are. Transactions, once again, just recorded in some general journal. And the amounts are now the same amounts that I used in these 3 as my balancing amount. Okay. So I just put in those amounts. You can actually see that when I did it, I just referenced it from that sheet. And then I add it up. Take the same amount to the credit side, but now remember, put the date there. What I have here is my balance, my closing balance was already given. Okay, that I had to carry down. If I go and have a look at it again, that closing balance for the unfinished goods on hand for my work in progress, which is the same as the unfinished goods on hand, was 386 something. Okay, so I put that in there, 386 something, and now again I have to balance it. Okay, and the thing with which I balance it is if I have my total and I really have my unfinished goods, it should not surprise you that I'm balancing it with my finished goods. We'll once again record that transaction in the general journal, and that finished goods amount, remember, it's not given, it is simply the total minus my balance for unfinished goods, give me my finished goods. And then on the first day of my new financial year, I have a balance that I'm bringing down, and it is the same balance that is there, once again for the same reason. If I have a balance of 386, 135 and 62 cents, I'm not going to lose money over midnight. It will still be the exact same amount the next day. Okay, let's take a break, and then I will come back and we will have a look at the other 5 journals, which are all a lot shorter. Thank you.